Hey, yo, you supposed to be watching my.
Sir. Hey, you guys, thanks for joining. This is Ken.the.don here. I have my special friend and guest, Jay Rubio. He is a top earner and a guru, I'd say, in Forex trading. And I'm just very excited to have him on with me. Sorry about the technical difficulties, you guys. We had to change the scenery today, so we're a little bit out back, but we are still here. We're still live. We're still doing it. So what is Forex? What is Forex trading, you guys? This is the opportunity for you guys to learn just a little bit about it. And like I said, I'm excited to have my good friend here, Mr. Jay Rubio. Hey, Mr. Jay Rubio, thanks for joining us, sir. How are you feeling today?
Doing great. Thank you for having me on. Super excited to help you guys better understand what Forex is and hopefully bring some value to your channel. So basically, I want to go ahead and explain to you guys what Forex is. Basically, well, I want to introduce you guys. Well, my name's Jay Rubio. I've been trading Forex full time now for for 4 years now. And the reason why I started trading Forex is because I wanted more time freedom and make money without having to clock in, right? So not too long ago, I created a mentorship group called Wolfpack FX the beginning of this year. I just wanted to help the average person understand what Forex is and make money in the largest financial market in the world. So basically, what is Forex, right? So Forex is like the stock market, but instead of buying and selling companies, we're trading and buying and selling currencies. So like if you guys have ever gone to another country, maybe on vacation, and you traded your dollars for euros, you've more than likely participated in the foreign exchange. Forex stands for foreign exchange. And and that's how you're able to go ahead and make money by the exchange rate. So like, for example, if one day the dollar is weak, the following day the dollar is strong, and you trade it for another currency, then you could potentially make money. So that's basically what Forex is. Nowadays, with all this technology, you don't have to physically take your euros or take your dollars to another country. Now you could basically open up a broker account and basically trade from the comfort of your home. So that's what makes it super convenient and super powerful for the average person to go ahead and participate in the largest financial market in the world, which is Forex. So just to start, I would want to let you guys know that I do have a promotion going on for those who want to learn how to trade Forex. And I've helped out anywhere from people who are just starting to learn how to trade Forex all the way to more seasoned traders. I do have a promotion going on right now for $25 a month, and you do get Forex signals where you could follow my trades and enter and sell the same trades that I'm taking, and have the opportunity to make money as you learn. At the same time, you will be participating in education Forex webinars, be part of a mentorship group and community where you could connect with those who are like-minded, and you will also receive personal one-on-one mentorship as what what you're experiencing right now. So just like any other trade, just like any other job, you do have rules in order to make money here with here in the foreign exchange market, and that's what we're going to talk about today. We're going to talk about how to you know take advantage of these rules so you could become profitable trading Forex. So let's go ahead and get started here. All right, so basically I broke it down to 5 simple rules, okay? So the 5 rules that I've used for trading are going to be the following. And the reason why I chose these 5 rules is because there is a trial and error stage that you have to go through in order for you to go ahead and become profitable. The good news is that I've cut those rules, and I've cut that learning curve for you guys to follow, and for you guys to go ahead and just follow this blueprint. Okay, so you could have the odds on your side. So the first rule is going to be focusing on one pair. What is a pair? A pair is like euro and the dollar, right? The euro and the dollar is going to be one of the a major pair in the foreign exchange market because that's one of the pairs that's traded the most, right? And the reason why you want to focus on one pair in the beginning is to avoid all distractions and confusion from other pairs, because in the beginning, it's very hard to just focus on so many pairs. You want to just focus on one pair because it's going to give you an edge in the market, right? That means you could focus on one pair and you kind of could um, dictate, like, okay, well, around this time, this is how much this pair is going to move. And you don't have to focus on like 10 other pairs, right? Now, when you trade, you should have a trading plan. So for those who are just learning how to trade, and for those who have been trading for a while, is very important to have a trading plan before you go ahead and buy or sell a currency. What I teach in our group is gonna be learning how to analyze your chart. And what do I mean by analyzing a chart is by marking up your charts. You kind of want to look at history, the history of this currency pair, right? Because history tells you a lot. I do have a top-down analysis where we go ahead and show people how to look and um, how to look and how to mark up their charts, starting from a larger time frame and start to zoom in at the trade and at the pair, starting from like a daily all the way to a 4 hour, 1 hour, into a 15-minute time frame, just in case you want to learn how to, you know, be a day trader, or if you want to learn how to be a scalp trader, which is, in and out the market really quick, or if you want to have a different trading style, which is going to be swing trading or day trading. That's more of a long-term trade where you don't have to be looking at your computer so much. You just enter, and towards the end of the day, you kind of go back and look at your trade and see how it's going. And I also teach risk to reward, because it's very important to understand what you're risking and what your reward is going to be. For example, usually I don't trade pairs, or I don't enter a trade if it's going to give me a break even, or if it's going to give me a one-to-one reward. What do I mean by that? What I mean is, like, for example, if you're going to enter a trade, let's just say we enter at a position where more than likely this pair is, the euro is going to appreciate against the dollar, right? And let's just say we risk $1 to make $2. That's a 1 to 2 risk to reward, right? Or a 2 to 1 risk to reward. Another risk to reward is going to be 3 to 1, which is going to be, okay, so I'm risking $1 to make $3, right? So if you're risking 20 pips to make 60 pips, that's a 3 to 1 ratio. You're looking to make $3 and lose $1, right? And it's also very important when you enter a trade to have a stop loss and a take profit. The reason why you want a stop loss is because you want to know, you want to get out the trade if the trade is going totally against you. If it's not matching up with our analysis, which is that first how do you call it? This first analysis, that first markup I have here, the first thing you see up here, you want to make sure that you have a stop loss, because if the market goes against you, you don't want one trade to go ahead and blow your account, right? You want to make sure, okay, if it doesn't go your way, you want to make sure you get out, because you don't want to blow your account, and you also want to make sure you have a take profit, because if the market does if it does go your way, you want to make sure that you take your money and you take your profit if it gets to a certain target where you want it to go. Then you could just take your profit and enjoy, and start planning out your next trade. Now, you also want to make sure that you don't revenge trade, because in this industry, guys, a lot of people just want to make up for their loss that same day or the following trade. And sometimes that's not the right mentality to go ahead and approach the Forex market. So how have I reduced this risk is by basically, if I trade one session, and if I lose 3 trades in one day, I'm basically done trading for the day. I call it the 3 strikes and you're out method. or the strategy, whatever you want to call it. Just like baseball, right? You get striked out whenever they throw three strikes, and that's how you basically avoid revenge trading. And you can't really and don't get into a trade just to make up for a loss. A lot of what I've learned is that whenever I did that, when I started trading, when I jumped into a trade just to make up for a loss, more than likely I would just lose again, and I will lose more money. So when you go ahead and do that, you start treating Forex trading like gambling, and that's not what I teach, and that's not the purpose of trading. You want to treat Forex trading like a business and not a casino, because when you go to Las Vegas, you go to Morango, you go to all these large or any kind of casino, it's basically a 50-50, right? A 50-50 chance you'll win that day, maybe even lower. But whenever you go ahead and mark up your charts and follow the rules and apply your risk to reward, there's a 70 to 80% chance that you'll be able to win. And you're also able to become profitable if you lose more. You could still be profitable by even if you lose more trades and win. And I'll show you guys more about that as you get to know me a little bit more. So remember, we want to make sure if you lose three trades in one session, you want to make sure you're out for the rest of the day. You don't want to go ahead and revenge trade. You don't want to just get into a trade for make up for a loss, or you don't want to treat this like a casino. We don't gamble here. We want to treat it like a business and manage our risk to reward. Now, how do you manage risk and protect your capital? This is super important, guys. Very, very important. And a lot of people don't teach this. A lot of people don't understand this. And it's super important that you manage your risk and you protect your money, right? And how do we do that is by not over leveraging. What do I mean by over leveraging? So a lot of people, they're under the they're under the influence that they're going to go ahead and double their account, have 100% return in 1 month of trading, which is very possible in the Forex market. But if you approach the Forex market in this type of mentality, more than likely you're going to lose and you're going to get discouraged and you're going to quit. And that's not the point. The point is to compound your money. The point is to go ahead and have your money make you money, right, over time. Because if you really think about this, guys, a lot of these investment accounts that the bank sells you or your broker might sell you, like a Roth IRA, a 401k, a CD, right? They're paying anywhere from 3 to 12% a year, right? So if they're gonna go ahead and pay you 3 to 12% a year, and you want to make sure you kind of follow the same structure, but there's also a way where you could go ahead and compound your money much, much higher than the bank can, only if you have proper risk management and protect your capital. So for example, let's just say you have a starting balance of $50 or $50 to $500, right? If you have a smaller trade account, right, I recommend you guys trading micro lots. What is micro lots? Micro lots is basically like 1 cent to 5 cents a pip. What is a pip? Pip is it's how we measure the exchange in the Forex market. So like if the euro goes up 1 pip, that's one measurement of movement in the Forex market. That's how you make money. So if you make 1 pip, that means you make 1 to 5 cents each time it goes up, or 1 to 5 cents if it goes against you, okay? And we want to make sure we do that because that's proper risk management. We're not over leveraging on that account. Now, if you have a medium-sized account, which is $1,000 or less, then you could go ahead and trade mini lots, right? What is a mini lot? So a mini lot, every single time you catch 1 pip, or if it goes 1 pip. If it's like 1 pip against you or 1 pip for your in your direction, that's basically like $1, right? $1 every time it goes up or it goes down. If you have $2,000, I would recommend trading a 0.20 to a 0.30. So for every $1,000, you see how we're just tweaking up our lot size a little bit more. So for example, if you have a $5,000 account or less, it would be maximum a 0.50. That would be considered a mini lot. All right. If you have a $10,000 account, then you could go ahead and trade standards. So you see how like like for example, let's go to our mini lot. You see for every 1,000, we're just upping our lot size just a tad bit more. So 1,000 would be 0.10, 2,000 would be 0.20 each trade. And you don't want to risk more than 1 to 2% each trade. So if you have a $2,000 account, or let's just make it simple, you have a $1,000 account, right? And you go ahead and risk 1 or 2%. So 2% of 2,000 is $20. So you don't want to be down more than $20 on one trade if you're trading a $1,000 account, because that's more than 2%. That's how the bank trades. They don't risk more than 1 or 2% per trade. So if the banks aren't doing it, why should you be doing it? Make sense? We want to make sure we create wealth, not gamble. Now, this is one of the most important. This is one of the most important subjects and areas of trading. It's basically controlling your emotions. You really got to think about this, right? So people spend 160 hours a month working, right? And there's, like I said, there's nothing wrong with working a job. I totally respect people who go to work, and provide for their family, put food on the table. Nothing wrong with that. I respect that so much. But you got to think about this mentality though. Look, people go to work 40 hours a week, 4, 8, 12, 16. In 4 weeks, that's 160 hours. If you're working minimum wage, you're making about $2,000 a month, correct? Imagine you're used to waking up and working 160 hours a week. And then when you come and trade Forex, and if you're down about $100 or $200 just to make an extra $600, if you follow that 1-to-3 ratio, it's very hard to stomach that. It's very hard to accept that you're down $100, you're down $200, or you're even down $20, right? So because you went to work and you gave up about 40 hours of your time just to make what you're down in about 1 hour, right? So very important for you to control your emotions. Very important. If you follow your trading plan, you should not worry about losing money, because when you go ahead and trade Forex, you have to understand there's a possibility you can lose money. But long term, if you follow your trading plan, you can be very successful trading money and trading Forex and create a compounding account, right? Because trading is literally like 70% emotion. Maybe it could be even higher for some people, and 30% your trading analysis. Because once you learn how to market your chart, once you understand where the highs and the lows of the market are, right? That's basically what the market is based on, is technical analysis. And the rest is just emotion, right? So if you follow and control your emotions, that's basically the hardest part of trading, is just controlling your emotions. In the beginning, guys, it was very hard for me to control my emotions, because it was hard to stomach the fact that I was down $1,000, right? It was hard to stomach the fact that I was down $50, because it took me about 6 hours to make that money at my regular job. But then it was very rewarding when I saw my account grow. When I started to see my account compound over time, it was very encouraging. And the only reason why that happened is because I followed my trading plan, right? So as soon as you understand, those rules, there's a very high possibility that you could become very successful trading Forex in the long term. Just stay at it, stay consistent, and just be obsessed with learning a new craft and learning a new skill. Because just like anything, it will take time. There is a learning curve, but when you find the right people that could teach you, it can cut your learning curve dramatically. And I hope you guys like this very short presentation. Because just like anything, just like any job, there is rules to the game. All right.
All right. Thank you so much, sir. Yes, this was amazing. Just to talk about, the 5 things that can help you. And you know, you guys, like you said, this isn't, you know, you guys just
This is my business.
sorry about that. You know, technical difficulties. But whatsoever, I am just grateful that we were able to come on and have this discussion. Thank you so much, Mr. J. Rubio. Is there any last things you want to say? Any questions you guys want to ask in the comments below? Is there anything last that you want to say, Mr. J. Rubio? You're unmuted. No. Alrighty. Thank you guys so much for coming on. This was just a little special treat to talk to you guys about Forex trading and how to do it. So you guys take care, and I pray you have a prosperous week. Alrighty. Take